Well, good morning, my teaser can family. How is everybody today? I will explain everything so we can relax. All right. So if we look what's happening, we see silver at 73.89. We see gold at 48.28. And we go, what the fuck's happening? Well, we'll show Bitcoin. It was down to 72. Let's see where that's at. Bitcoin's down to 67. So people need money is what this says. Now we'll get into the why. Normally there's a 10 o'clock drop, which is happening now. And I found this video, but let's explain it. Basically what's happening, the U.S. has COMEX is broke. COMEX doesn't have any silver. They have no physical. So what happens here is we have a lot of shorts that are trapped by the banks. We know JP Morgan and all those fellows have been shorting it for 50 years. And now they got to pay up. And there's no silver to pay up with. So as the price drops, you keep getting margin calls and you keep getting the algorithm play. This is not about physical. So we see it at 73, 74 is the paper price, not the physical. All of us who own physical, we're fine. So let's see what it is in China right now. China's at 89.11 right now. China's gold is at 51.11. These are the physical prices, but more physical than what we're showing. Now I'm going to show you a video that will explain it all, which is this AI woman, the end of cheap silver, and this price floor. So as we know, China keeps buying during the night and it goes up, as we saw yesterday. But then it comes back to the US and you keep getting margin calls and you keep getting algorithms, and they don't have any silver. They can't get out of it, right? The margin call keeps pushing it down. God knows how many options are out there that there's all these margin calls. So in the US, it's what is why it keeps dropping. But again, this is the paper world, not the physical world. In the physical world, we're fine. Hold your physical. So now here comes the US. They need silver to make their other products, right? They need silver for mostly the defense contractors to make missiles and all that shit. So the price floor is about the government. See, if the price was too low, the mines don't mine. It's not profitable for them. They need a certain price to open the mine up because the mine's, like I said, very expensive to mine. It's like a car plant, right? You got to pay. The plant is expensive. The machinery, the tools, getting the building, paying the utilities on the building, the rent, the heat. So it ends up where we got to sell the car for 40,000, or we can't have a plant. So that's what's happening with silver. They got to sell it at whatever, $100, $200 an ounce, or they're not profitable. And everybody's going into gold because gold, frankly, 4,900 or 4,900, 5,000. Oh, well, that's worth it. Silver's not worth it. So you're keeping out people who want to create mines. You also have China, Russia, and India, and probably Saudi Arabia going right to the mine and buying the silver out of the mine. So whatever mines were here, there's no silver in them because China and the BRICS have bought it. BRICS wants a higher price because they got it, but the U.S. keeps fumbling around with the shorts and trying to get out of it. And there is no physical silver here. So what happens is people are standing for delivery. So China comes in to COMEX and says, I'm going to take your contract. I want delivery. Well, there's no delivery to give them. So then the price goes down, and then they short, which the more shorts you have, the lower the price goes, and the algorithm kicks in. And, like it's down $10 today is a joke. Why would silver be down 10? High demand, low supply. Silver should be going up. So in our world of physical, we're fine. We just it's noise. We kind of ignore this because we really weren't looking to sell it anyway right now. We're not looking to profit take silver. We're there for the long run. And I know if we need to sell a little bit here and there, pay a bill, go on a trip, send Johnny to school, we do that. But otherwise, we're just owning physical, which is getting to be very, very limited and very, very expensive in the real world. And that's what's going to happen. John C., hello. What's the latest news? Well, I'm going through that right now. So this is where the problem lies, is people coming to COMEX because it's cheaper in COMEX than it is. It's cheaper in COMEX than it is in China to buy. But they need to take delivery of the contracts. And that's really what's happening. So this is why, now I'm going to play this video. The price floor is to open mines, which means we don't have any silver physical. We made it a critical mineral. Great, who cares? The price floor is there so the miners will open up, right? If we make the price floor $200 or $150, or they reprice that, the miners will then open up mines, which take 3 years. The mines that are open now, like I said, probably don't have a lot of inventory in them anyway, because China's coming in, and a lot of these others, Samsung, Tesla, are coming in, buying the silver right out of the mine, taking it to Switzerland, get it refined, and then use it for their products. Some people think, oh, well, they'll just substitute. They won't use, for solar panels, they won't use silver. There's nothing else they can use. That's why they use silver. Did they just use it because it was cheap? And now they're not using it? There's a substitute? No, there is no substitute. Sorry, Mr. Wonderful. You're wrong. There is no substitute for it. And I don't think that price is really determining if they make it or not. I don't think that's an issue. So a lot of it is, this whole fiasco is COMEX has run out of silver. COMEX has basically collapsed. The banks are trying to get out of their shorts before they collapse. The dollar's collapsed. So I went and got my barbecue yesterday. Um, and she's the lady goes to me at the restaurant, how are you going to pay? Cash or card? I go, what's cash? Paper money, that's worthless. She says, well, you keep saying that. And I go, it is worthless. Like, again, we're on the Titanic and it's sinking. However, oh, it won't sink. It's unsinkable. Because they said it's unsinkable. It must be unsinkable. And you're like, no, it's sinking. The dollar's worthless. Now, because you can't really see the value of the dollar, see, the dollar says 100 on it, or 20 on it, or 10 on it, right? The dollar has a little number. So you think, well, the dollar's still worth 100, still $100. It's what the value of the $100 is, and what it buys is nothing. I had a real good example that I told Lissa about money, and I'm going to share with you. I thought it was well done. I was teaching her, like, why do we have money and what it is, and that. Well, let's do that, and then we'll get to this video on gold and silver and why that's so important to gold and silver and this floor. So we don't have any silver, and we need some mostly for the defense contractors and whatever else. Obviously, you need 500 ounces for a tomahawk missile. Obviously, there's no substitute for that. So that's the problem, right? There isn't any. It's not like we'll pay more for it. It's China will not export it. And the way Trump's been bullying everybody, they're all telling Trump to fuck off, as all these other countries. Trump thinks he bullies it. He doesn't understand. Play politics. Be nice. So this is the problem. He doesn't understand it. So now nobody wants to sell us their silver. The defense contractors need it. They can't get it. So this is the answer. So there was apparently 50 countries, not including BRICS. This must be the other countries who signed this agreement about we'll set the silver floor, because obviously maybe there's no silver here, which you would think there is silver mines here, but maybe they're bought, or I don't know, this environmental crap. So in other countries where they have silver mines, they'll be able to set the price so the miner can go into business for it. That's what it seems like. But here it's still the US. We're still doing the same thing we did last Friday, getting out of our shorts, margin calls, again, margin calls. Like, what we're doing, 5% every day. Like, just fucking just say no more margins. So that's what's wiping people out. They're forced to sell. The price goes down. Meanwhile, as I just showed you, in China, it's $100 for silver. So take that that's the more of a physical price, but even that physical price isn't real. So let me explain what I taught Alyssa yesterday about why money. What is money? Medium of exchange. Why do we have it? Because in a normal world, how would you get things? So, for example, how would I go to the grocery store and get a can of tuna fish, or pita bread, or my lemons, or whatever? How would I get things? I could barter if I had other things, but what if they wouldn't accept my barter? What if I came in with my Canadian club and I'd say, I want to use this, or my silver, and my gold, or a mantle card, but they don't want to take it. They're picky what they want. And so I wouldn't be able to buy things. So think of money as a unit of trade. You trade it for goods and services, for glasses, for shirts, for tennis shoes, to pay your rent, to pay your bills, to buy your food, go on a vacation, stay at a hotel, all that stuff. And that's what you gotta. The knot in your back isn't. So that's basically
they actually did it. They are also larger than.
all right. So you need to trade. So everything's free trade. That's the whole concept of free trade is I don't have to pay to trade with you, but I trade you X for Y. And we've determined that it's not tulips, it's not cows, it's not seashells. The best thing we can trade is this money. And we put numbers on it. So instead of everybody having a one, oh, I got $100, so I can trade for something worth, $80, and I'll get change back for it. Well, thank you, John Z, and you're more than welcome to pay me if you'd like. Yeah, I agree with that. So we're trading something to get something, and we've determined it to be the dollar, to be this. And then in a different country, they have a different one. But notice all the countries use some sort of paper with some sort of numbers on it. So you trade this for food, this for a hotel. So if you travel, you're trading this for a hotel room in Germany. You're trading it for going to food. You're trading it for gifts and chocolate and clothes when you're in Germany. So it works everywhere. That's what the credit card's for. But you're trading. So you have something of value, the money versus a shirt versus glasses, a gold chain, silver, whatever, Canadian club. So it's a trading mechanism. And we've determined, Adam Smith, that the best thing to trade is money. That's the best way to exchange value. Because if I gave you tomatoes or oranges, you might not want them. But you will want now. It's something everybody wants because everybody needs to spend it, right? Because we all need stuff. Now, the government cannot tell us what we need. We have to determine what we need. We need a free market. That's what we need. We need a free market in gold and silver trading and in Canadian club trading and barbecue trading. You need a free market in that. And that's basically what money is it trades for the goods and services you want. And also, if you go to work, they give you money. Do you want it? You want bananas? At your job, I pay you in bananas. But I can't trade banana. Nobody wants bananas. Nobody wants apples. I can't go by to the dentist and say, "Here's 10 bananas to do my dental work." Everybody takes money, and that's the point of it. So everybody takes money for their goods or service. Like me, if I sell football on Teaser King, I don't want anything to do with apples or oranges, but I'll take money. I'll take gold and silver, which is the actual real money. So it's been determined that we're going to present the money as paper, and we're going to put numbers on it. So it's different values, right? So if I want to go to the grocery store, I take this, I go to the grocery store and I trade it. Yeah, I want a steak today. I want tuna. I want chicken. I want apples and oranges and broccoli and cauliflower, all that stuff. So you're trading your money for goods and services. You're getting money by working. So this is how we all get into this working thing, to get money, to collect money, to use it, to trade it for goods and services. And so again, why money? It's just that. So that's what money is. It's a trade. It's the medium of exchange used to trade for goods and services. It's critical. Can it be digital? I don't think so. I think certain areas do it, but nobody trusts the digital. Again, this must be trusted. People trust this, even though it's not worth anything. We know it's not worth anything, but people still trust this. So they know if they get $100, they still think they're getting $100. Where they fail is the value of the $100. So when I went and paid for my barbecue yesterday, I give her a credit card and I said, with the dollar, it's worthless. And she says, well, you keep saying that. You've said that before. And I go, well, haven't you been to the grocery store? See, nobody can see, we can see gold's worth $5,000 now, 4,900, let's say. So we see the value of the gold and silver in dollars. But we don't see is the value of the dollars. There is no scorekeeper of this is what this is worth. We still see the 1, the 5, the 20, the 100. So we still think we got a $20 bill. We still think, the dollar's worth $20. But what we're not seeing is what's the value of the dollar itself. What does the $20 trade? Before I showed you pictures, you filled your cart up with groceries in the 1970s and you needed a 20. Now you probably need 200-300. The value of the trade went down. It takes more dollars to trade for food and groceries and take a trip and all that. And that's why you see prices going up, is as they're printing the dollar to death, making it worthless. The trade involves more dollars now for tuna fish, $4 for a big can, which used to be $1, right? Why is tuna so expensive? Well, the gas has gotten more expensive. When they catch the tuna, they had to go out in a boat, and that gas is more expensive, and all the labor and the medical and all the everything you have to pay. So the prices, the costs went up because the dollar's worth less, and then it ends up where we got to charge you, $4.50 for the big 10-ounce can of tuna, and about $2 for the little 5-ounce can of tuna, which used to be 6 ounces. So we'll take a little tuna away and we'll charge you X for it. And that's what we're going to do. So it's a trading mechanism, as everything is in life is a trade. And that's the whole key to it, right? It's the value of the trade that creates everything. So when people see prices going up in the grocery store, they think, "Oh, I got to trade more dollars for M&Ms." They think M&Ms raised their price. No, your dollar value dropped, but there's no identification of the dollar dropping. It still says $20 on it. So in your mind, it's still 20, but it isn't. It's really, what does the $20 buy you now? What's the value of $20 now? And that's gone way down. That's why I show you this, because the dollar's worth 1 penny. That's all the dollar's really worth. The value of the dollar is 1 cent. The value of 100 is $1. So even though it says 100, it doesn't have it. And that's what everybody misses. They don't understand the value. They're not seeing the value of the dollar drop. They're still seeing it says 100 on it. And, so I got $100 and until you go buy it to sell it and trade it. So when you trade it for food, it doesn't give you as much. When you trade it for other things, it doesn't give you as much. And that's what's called inflation. Why is the value of the dollar dropping? That's the inflation part of it, because they printed it. So they think, well, we'll just keep printing, nothing will happen. And yeah, there's too many of them and it loses value because you've got so many dollars in play, 150 trillion, thanks to the petrodollar and the FX exchange and all your bullshit government printing and COVID where they passed $7 trillion laws and the 800 billion you're shipping to Ukraine where everybody steals the money and it really doesn't do anything. It's all a Ponzi scheme. So the value of the trade of the dollar is gone down. And there's really nothing that really says the value of $100 bill is $1. There's nothing that says it. or people don't see it, or people don't want to see it. So it's, do they trust it? So the lady at the restaurant giving me a hard time going, well, you've said that before. And I'm like, it isn't worth anything. You're charging me this $15 for a half barbecue chicken and fries and coleslaw. All right. I'm sure 20 years ago, you probably charged me $5 or $6 for it. Right. McDonald's, I show you those old 1970s, and it was 50 cents for a hamburger, 20 cents for fries, 20 cents for a Coke. Now it's $10 for a hamburger at McDonald's, which isn't even real meat anymore. So that's where you kind of should notice the value of the dollar. The trade using the dollar goes down. Let's call it that. Let's call it the trade. So when you trade, it takes more dollars for a fair trade by McDonald's or Canadian Club or barbecue. They need more money to make it a fair trade on their end, because not that the cost went up, but the dollar lost value. So they needed more dollars to buy their inventory to trade with us. So when I go get barbecue, it takes them more dollars to trade to get more chicken in so they can cook it for me. It used to maybe be $2 or $3. Back in the 70s and 80s, it was probably a $5 meal. So now it takes them, their trade is more expensive, which they have to push the price up because they're in business to make money. So if it now costs them $7 to do a chicken, and the oven and the utilities and the rent and the heat, everything they have to pay, so they got to charge me $14 in a trade to make it worth their time to stay in business. Otherwise, I got to go out of business if they can't raise the price to cover all their costs. So this is just a game of the dollar has no value, but nobody understands that. So again, why the dollar? Because that's the best thing to trade. I can't trade apples and oranges, and I don't want to get paid in apples and oranges. Right. So if I got paid in apples and I go to there and I said, well, I got 10 apples for the chicken, they might not like it, but they will take dollars. It's the best medium of exchange. It's the best thing to trade is the dollar. Now, you're not supposed to fuck it over like the government does by printing it. The Federal Reserve, which is totally illegal, should not be there at all. It's not even supposed to be there. It's totally corrupt. All your politicians are corrupt because they all take dollars and they all trade. If you give me $1 million, defense contractor, then we'll buy your missiles. That's the trade that the government and the bankers do. So the best trade is the dollar. So you get paid in it and you use it to buy things. And yesterday we talked about investments, which is what do you do with the dollars to make more of them so you can buy more stuff and better stuff and have a nicer life, which is perfectly fine. You get your mate. That's how a Madoff comes in. It's like, oh, I'm going to make more money in Madoff. I'm going to get 15% with no risk. Great. Where do I join? What is he doing? Well, don't ask. You can't ask Madoff what he's doing, but you just who cares? I'm getting 15%. And then people call it greedy. Well, I'm not greedy. If I'm getting 5% and I can get 10, that's smart. That's not greedy. Really, I don't like, there's no such thing as greed. You're just trying to improve. So I don't see how really what greed is. The damn companies are charging more. Well, no, they're just trying to make more money. That's why they're in business. So there really is no such thing as greed, I don't believe. So anyway, I get paid in dollars and I spend in dollars. Hopefully I have enough left over. And what we've determined is the best trade with our dollar, which I call Rumpelstiltskin, is to trade it for gold and silver. And we're watching gold and silver go up. You have to be in physical, not paper, as I yell and scream at the top of my lungs. Stay out of ETFs, stay out of stocks, stay out of Bitcoin. I just showed you Bitcoin, what, 67,000. How long are you going to stay in Bitcoin? So you're in it and it's going down and down, down, down. People who are in these options who are shorting it and losing their ass because why are you shorting the most highly demanded thing, silver and gold, are then cashing in their Bitcoin, which it's the same thing as stock market, and the same thing as gold and silver. When you need money, you sell it. And if there's more sellers than buyers, the prices drop. So that's what you have in the gold and silver now is there's more sellers because they're now getting asked margin call. And this is the problem playing options and derivatives. You lose every time. You can't win playing options and derivatives unless the game's fixed, which is what COMEX has been. It was Madoff. The game was fixed. You're going to buy and sell and short, but we don't care because there's no physical in the game until China said, yeah, we want to take delivery of physical gold and silver. That's what's changed the game. But everybody's in it under margin. All these banks, pension funds, and they're all going broke because they have to get more money because it used to be 10% is now 20% margin. And you got to come up with another 10 grand per contract. Where are you going to get that from? They can't. So they go out and then so we got selling and then the price drops. And that's what's happening. So the medium of exchange is fine to buy things until you fuck it up by printing too much and making the value of the medium of exchange go down. You should never touch the medium of exchange. That's why it needs to be backed by gold. If it's backed by gold, the value never moves because you can't inflate the price. You can't inflate the gold. You can't print more. I love showing my precious. You can't print more of this. This is it. This is what you have. You can't print any more of it. Right? So you have it, you can't print it, comes out of the ground until there's no more in the ground, which is what we're at. But everybody's wants it. Everybody wants to trade in gold and silver because it can't be inflated. And they realize it can't be printed like the dollar. So everybody initially, the mafia and the drug people and the politicians and the Zelenskys and the wars are all about dollars, about accumulating more money so they can trade more, so they can have a better life because I'll have more money. Or let's go print more money. And they don't understand that the value of it drops because you can't print it. So if you're on the gold standard, you're fine. That's why you go on the gold standard. You never have to worry that the value of the dollar drops because that's the whole that's the game. If you kill the value of the dollar and it drops to zero, aka the Titanic sinking, if you kill the value, there's no value left. And if there's no value left, what do you got? Well, I got $1 million, but they're not worth anything. And that's the point I keep stressing. So I can't trade it. Nobody wants to trade with me. They don't want to take my dollars for tuna fish. And that's the problem. So you have the dollar. You want to go to the Kroger's and trade it, and they won't take it. Or I love how now they only take like debit and credit cards. They don't want to deal with money for some reason, which it's all the same. I don't like yesterday paying for the barbecue. He says, you want dollars or credit? And I go, what's the difference? Neither of them are worth anything, but she doesn't see the value dropping. Kartik is worried about silver. Yeah, Kartik worries a lot. Silver is good. Well, I can't, there's nothing I can do with Kartik but educate him. That's all I can do with anybody is explain what's going on, which is what I'm doing. And really, you're educating them. Just hold on to physical and you're fine. Don't play options. Don't play ETFs. And don't worry about the price going down now. This is the end of the COMEX game. And that because everybody has to, the margin calls are normal. You've got these people shorting. It's that the people screwed themselves over shorting. I've been yelling since 2020 to buy, physical. If anybody would have listened to me, nobody would be in the mess they're in by playing ETFs or by doing options, which most of this class is bought physical, and most of this class is fine. There's a few who are in the stocks. There's a few that are in Bitcoin. I don't know anybody that's in options in this class. I think there was one or two guys, but I talked them out of it and said just buy physical. But that's because at the end of the day, it's a trade mechanism. I'm going to trade my gold and silver for goods and services because the money has no value. So I got to get out of the money. I got to get out of this because it has no value, because they keep printing it. And therefore, I can't trade it at the grocery store for the way I used to. But this keeps the value. So we notice this has gone up. All right, it's 75 right now. We know it's worth 500. And we just hold it. And then as this goes away, we start using this. But all of a sudden, our value in this has gone up, where I can buy the same thing that I used to buy 10 years ago with this now because the values switched. What Comex did was they kept the price down on purpose. They price fixed it down. So it stayed at $20, $25. So two things happened. One, the miners didn't open mines because there was no profit in it. And two, a lot of people didn't get into silver because they go, it doesn't move. So I'm not going to buy it. And they would go into the real estate trust, or they would go into the stock market. And the banks want you in the stock market. They make all the, either in real estate trust or stock market, the banks win. They get all this commission from you. They fuck you over and you never win there. And you jump from stock to stock, they get more commission. Mutual funds or any of that, they charge a big management fee. So it's all win-win for the banks if you're in the stock market or real estate. If you're in gold and silver, you don't get out of it, you stay in it. So there was no advantage to being in gold and silver, except for, because you should be in, you could make more in real estate trust and more in, which are mortgages, or in the stock market. So that's where all that came in, is no. So they suppressed the price so you wouldn't be interested in it, because except for me and you guys, nobody else knows that gold's the key. Egon gets it now. Mark McGuire, he got it. But most of these guys don't get it. They're sellers of gold like Peter Schiff and Andy Schechtman, but they don't get it. They don't understand. They think they understand. These are the idiots that listen to things and hear them. And that's why you hear Andy Schechtman. Well, Jim Rickard said this, and Peter Schiff said this, and Joe Blow said this, and Ken Stabler said this. So I'm just repeating what they say. And that's the problem. I don't repeat anybody. Do I ever bring up a name? If I bring up a name, it's to badmouth them, to prove they don't know what they're talking about. That's what I do. I don't listen. The only person I bring up that I learned from is my teacher at my master's program, in Adam Smith. Adam Smith is, some guy at the club said to me, "Oh, so you know Hayek or this or that?" I go, "No, I learned from Adam Smith. That's who I learned Austrian economics from. He's the one who created the trade methods. So in other words, he'd watch people trade money for donuts or muffins or something, and then the guy across the street saw it, and then he opened up a muffin shop too, and now they're competing, and we win because we can go there and there. But you can't tell what we're going to buy. You don't know we're going to buy muffins, but when they're there, we might buy one. But you don't know. The government can't control the market, as what is socialism and communism. They're trying to control the market, or fascism, like Hitler did. So you can't control the market. We control the market because we don't know what we want either. I can go to the grocery store now and I go, "Hey, that bagel looks good," but I wasn't going to buy a bagel, but or I buy my pita bread. I'm going to go buy my veggies, but that's about all you know. You don't really know what I'm going to buy. And I don't really know what I'm going to buy. If I walk by the cookies, I might buy them, or I might buy eggs, or I might buy, usually I'm buying eggs and half every other week. I always buy the 18 container of eggs because I'm going to eat them. I mean, I eat usually 3 eggs. Like I'll have a hamburger omelet with onions and mushrooms after class. So I always do that. But so why do we want to trade with gold and silver as opposed to money? Because the money's been printed too much. That's the death note. That's the joker. When you print the money too much, it has no value. And it's been proven in history since the Romans, through every France, Spain, England, through every country, they went broke because they printed their money that wasn't backed by anything. They printed too much of it and it made it worthless. Hitler in World War II was printing British pounds and was going to flood the market with British pounds to make it worthless. So Hitler got it. Hitler gets Austrian economics, right? Well, wow, let's say the Germans did. Maybe not Hitler, but maybe his finance guy. No, they had guys doing all these British pounds and they were printing them in a shop in Germany, the prisoners who were good at it. So they're printing, millions and millions of British pounds and they're going to dump them on Britain. And then they realized just before they do that, these are so good, we'll just use them as money. And so they didn't flood the British pound. It was better that they used them. And so they made all these counterfeit British pounds that nobody could tell the difference. And they just simply used the British pounds, but they were going to flood the market. England did that to France, 1791, where England made a bunch of French francs and put them in Paris and they dumped all this money and made it worthless. That's when the money goes worthless, is when there's too much of it. And when you had the petrodollar, that's gone. And when you had the FX exchange, where China needed dollars to buy India's gold or whatever, or Saudi Arabia's oil, they needed US dollar. Well, that's gone. So the FX is gone. The petrodollar is gone. China's buying oil from Saudi Arabia with yuan, backed by gold. So once you have all that, that's the point. Every country has gone. Why do you think Venezuela has hyperinflation? Zimbabwe, when you get the wheelbarrow coming out in Germany in 1920s, because you printed too much and you made the value worthless. So nobody wanted to trade with you. I don't want it. And they call it a trust issue. I don't trust that your money's any good, so I don't want it. And we're very close to that. Most of Europe and Asia doesn't want our dollars. That's why they're dumping all of our treasuries that they had bought, and they're dumping them. They're saying, you know what, give me the dollars back and I'll go buy gold and silver with them. So all the gold and silver and bricks is huge. The demand is huge. Don't let that fool you. What is happening here is strictly paper. This is the paper options market. Why there's an options market? It's absolutely illegal, immoral, and the stupidest thing I've ever seen in my life. As an economist, it's stupid. It's not smart to do options. I mean, it basically, you don't know what the value is of it. We'll hold silver at $25 an ounce. That's not the real value. They're pretending the real value is 25 when all along it was probably 500 or 600. Now it's probably 1,000. When you hear me say it's worth 10 times, because I know it's limited and I know it's been suppressed. So that's why I say this is not worth, what's it, $75 now? This is worth at least probably $1,000 because it's been suppressed. So it made the trade go down, but it wasn't real. It wasn't because the market, people wanted silver. They would have traded for it with the dollars. Now the price starts going up and everybody's like, oh, it's really worth more. It's always been worth more. But only me and a few people realized it was worth more, right? I knew it was worth more all the time. So I'm buying baseball cards and I really want to buy gold and silver because I really know those are worth more than they're showing. Because if you're suppressing the price with options, the physical, and you got to have physical, is really worth more. Profit, good morning. Comex is gone. They basically, I'll show you a video as soon as I get done explaining money. It's basically, they don't, if anybody asks for physical, they don't have it, right? It's all gone. And, you can't just have options in COMEX. You have to actually have the physical metal, which they don't have. So it's basically winding down, let's say, but people are going to buy it, but there's no physical to get. So that's why Trump's doing this. Oh, let's do this floor. The government made it a precious metal thing and strategic metal, and they're going to do a price floor on it. Why? Because we don't have any gold and silver. That's really what they're saying is we don't have any. We need mines to open. But you know what? At these low prices, because everybody has to get out of their options and short, and we're doing margin calls, and then the analytic the algorithms kick in. It keeps pushing the price down, so the miners aren't going to open up a mine in the U.S. because they can't afford it. I need a $200 price on silver, and it's 75, so I can't open up a mine. And the defense contractors need the silver and everything. So there is no physical in COMEX. So it's still around to a point for a little bit longer. It's like a store that goes out of business, like Kmart's. Kmart's eventually went out of business, right? Or J.C. Penney or one of these, because here comes Amazon. So but they don't go out right away. I mean, everything's on sale, 80% off, stores start closing, but it's still there for a little bit. And the COMEX is still there for a little bit. But basically, once there's no physical to get, then nobody's going to play. Again, I'm not going to go long, buy your short, and demand the physical. If there's no physical to demand, then you don't have anything. And that's where they're at. So it's pretty much done. And again, that's why the strategic reserve of silver, making it a strategic mineral, is because we don't have any. I mean, it's very obvious we don't have any now. I'll show you this video. But anyway, so again, we don't see the value of the dollar goes down and you can't trade it because the trust goes away. Nobody wants it. I don't want the dollar because it's been printed too much and it keeps losing value. Tuna fish keeps going higher and higher. Fruit Loops, Oreo, they're like $6 a box now for Fruit Loops, and Oreos are $5.80 for the little thing that used to cost $1. You know, the 3 rows of Oreos. It's approaching $6. They're not raising the price. It's the value of the dollar is worthless. That's the problem. You can't trade it anymore. In trade, they want $6 for the Oreos. That's the problem, right? So in trade, you want to have gold and silver. People will trade you gold and silver for food, but they won't trade you for dollars. And as we discussed, Bitcoin's down to 68,000 or whatever. Nobody wants Bitcoin because nobody wants digital, right? There might be this whole digital thing, and the whole AI thing is going to collapse anyway. It's the stupidest thing I've ever seen. AI, I don't like it at all. Not only is it wrong most of the time, but when you listen to Mr. Fuji, he what are you talking about? There's no proof. There's nothing he says that I believe. If Egon's on and Egon's talking or I'm talking, you can believe what I'm saying. But if I had AI do it, I wouldn't believe what I was saying because it's just taking data from before and formulating it and printing it, and it's not always right. It's how you ask for it. Anyway, nobody wants digital, so I can't really. I don't see us ever going to Kroger and using digital money to pay for food. They'll take gold and silver before that. Probably what should happen is a gold and silver credit card where it's the gold money, gold-backed currencies on your credit card. Then it keeps it easy. Then I don't really need print a lot of money, and so things like that. But or the gold and silver coins. But how do they give us change, right? That's the problem. And no, there's not enough at these prices. But once gold hits 20,000, silver hits 3,000, then you don't need as much. And then prices come way down. The $500,000 house, I can trade gold for that because in gold it's worth maybe 25,000 or 30,000. Everybody's stuck on, well, it's 500,000 in monopoly money. But even this is monopoly money, $75. So if you translate it into the $500,000 house in silver, it's whatever that is. 500,000 divided by, let's call this 75. And that's what it is. Cart, hello, both gold and silver are falling. Yes, they are. Paper, not physical. You're having a hard time dealing with it. This is paper. This is done on options and shorting and people getting called for margin calls. That's what's happening now. The physical, if you have physical, you're fine. It's just a blip right now, but in paper, you're fine. You're dead. So I hope you have physical. But anyway, that's how it is. You're trading. The concept is to trade this for goods and services, to get paid in this. So I'm trading my skill set for money. Give me $100,000 and I'll do the job for you. I go in and do the job, and then you pay me in this. That's a trade. And then I take that and I buy it. And that's the point. But you can't fuck up the dollar as they've done. So it's called inflation. You're inflating the money supply. You're making the trade less desirable for the people wanting the money. I need more money. That's not enough money. I need, like I said, Oreo cookies. I now need $6 for my pack of Oreo cookies, not where I used to want $1. So that's the problem. You watch Hogan's Heroes, right? He goes to the fruit market and it's, grapes, 29 cents a pound or whatever. So that was like in the late 1960s. So that's really what it is. So the problem is you can't fuck up the medium of exchange, the money, because that's not the money's purpose. The money's purpose is to buy and sell things, get paid for things in money, and then use it to buy things. That's the purpose of money, not to be printed to death where these corrupt politicians and bankers are, well, let's print $1 billion here. Let's send 60 billion to Ukraine. Let's print this. Let's print this. Let's have the defense contractors, and we'll just keep printing the money. That's not the point of it. The purpose of it is to trade for goods and services, not to actually exploit it and print more and more of it. And the idiots who are doing it don't realize that kills the value. So I need to trade. I need more dollars to trade to buy milk and ice cream than I did before, because you're killing the value of the dollar. And that's a simpler way of putting it. And then right now I'm saying trade for gold and silver. Do not use paper. Do not do options. Trade for physical. And the physical will hold its value because it's extremely limited. You can't just print like we're printing all these dollars. You can't print gold and silver. It's just there. You can't print it. So therefore, what came out of the ground is all we got, folks. And everybody's starting to realize it. All the BRICS team realizes it. So all the BRICS players are buying more and more physical gold and silver. And now there isn't any left. And now the U.S. is going, what the fuck? What's happening here? And that's it. So I'm going to play this video, and it's very good. Well, I explained the reason, Carl. It's Kurt. It's options, basically. The COMEX people bought a lot of options, so they do margin. So they buy $100,000 worth of silver and pay with 10,000. But if they're shorting it, so again, you short hoping the price drops. But if the price went up to 120, all these shorts were underfunded. They needed to stay 10%. So they needed $12,000 instead of 10,000. They now needed like what 20,000 to keep that same 10%, something like that. And therefore, they got called. You got to keep the 10th. So uh, if you give them 10,000 to control 100,000, and you're shorting it, you want the price to go down. So as the price was up, now the value went up, right? So you bought 10 at 10,000 each is 100. It's now worth 120, right? It's not worth 100,000 anymore. It's worth 1,200 or whatever 120 is times 10. So 120,000. So you need to add to your margin. You need to increase it, which they couldn't. So then they sold them. So they sold the short because the people didn't have the margin to cover it. And so when they sold it, that knocks the price down because you're selling and there's no buying connected to it. And then the algorithms start kicking in, lowering the price. So in the physical world, like I said, China's at like 112. What was China at? So here's China, 51.11, not 48. And the silver is at 89 right now, which is low, but it's, why that's falling, I don't know. But it should be higher, but it's still not 75 or whatever ours is at. So that's really what's happening is the margin calls, because the price is going up. That would make sense. You have the margin calls. Now that the price is going down, the banks are getting scared and they're raising margin limits. So people keep having to either pay it or lose their option. And if they are in a sell position, they sell their option, which triggers the price to go down because there's selling going on and not buying. And even though there are buying going on, so the seller is going on, and then the algorithms kick in, and that's why the price is going down. It's all paper. If you have physical, it's just noise. I'm not even paying attention because I have physical. I don't give a shit what's happening in the paper market. I don't give a shit about margin calls. We'll let it blow over, and then we'll see the price go. And that's what's happening, basically. We thought it was just a one-day thing because of Friday being the mark-to-market day, and we thought, oh, okay, that'll happen. But this is why I say COMEX is gone, because they don't have the physical to cover, and they got to keep with the margin calls. All the shorts are getting kicked out. Well, who else is in it? And people dumb enough to still play margins got to be out of their minds. So that's what you have. You have a lot of that going on. And where we thought it was just going to be Friday, it's still lingering this week. Nothing to worry about. What was silver? 77, 78. So let's see what it's at now. So silver is 76. So there is buying going on, and gold's 48.59. We're not really worried too much about gold. So 76.52. So you see it hits a bottom and then it starts going up. But there's nothing we're concerned about because we have the physical. If you have the physical, all this is noise. This is options and algorithms, and it's all fake. It's all Madoff. Oh, Madoff never has a losing trade. Yeah, it's easy when you never trade to never have a losing trade. And by the way, Madoff never had a winning trade either. So he says there's no risk. I think he said I've never had a losing trade. I'm 100%. Well, technically, he was 0% on trades. He didn't win anything and he didn't lose anything. So he was 0% Madoff. But you had JP Morgan, the SEC involved, and the Russian mafia all making that Ponzi scheme work. And you have the same thing here. JP Morgan and the SEC and all the bullion banks are all the same players. So I'm going to show you this video. It's a very good video. It explains a lot. It's a little AI-ish, I think, so I'm not, but it does explain. All right. What are you, the moderator, John C?
Hello and welcome back to What Changes. I am your host, May. Today, we are discussing a development that fundamentally alters the landscape of the global economy and specifically the precious metals market. We are talking about a shift that could mark the definitive end of the era of cheap silver. For years, investors and analysts have watched the markets for signs of a structural change, waiting for the moment when physical reality would overtake paper trading. According to the data we have before us today, that moment may finally be arriving. We are looking at a major policy development coming directly from the United States government. This is not a rumor. This is not speculation from an anonymous source. This is a confirmed policy shift involving the Vice President of the United States and a meeting of more than 50 nations. But this story is about more than just a government announcement. It is about a massive disconnect in the market. We are seeing a pattern where silver prices are being aggressively sold down during American trading hours, while physical demand around the rest of the world remains relentless. We are seeing delivery notices at the COMEX, the primary futures exchange, hitting historic levels in a month that is usually quiet, and we are seeing market imbalances that are now larger than what we saw during the 2008 financial crisis. What happens when the United States government decides that the price of a critical mineral cannot be allowed to fall below a certain level? What happens when they establish a system to create price floors? That is the question we are answering today. If you have been wondering why silver struggles to break through the $90 level despite overwhelming demand, or if you are curious about why the United States is suddenly treating silver as a strategic asset comparable to oil, you need to hear this breakdown. Let's dive into the details. Let us begin with the headline news, which is the catalyst for this entire discussion. Major policy developments have just broken regarding critical minerals in the United States. United States Vice President J.D. Vance recently addressed a meeting of more than 50 countries. The goal of this meeting was specifically aimed at boosting access to critical minerals. During this address, the Vice President announced that the United States will establish a system creating price floors for these commodities. This has been confirmed by Reuters. The United States is officially moving to establish a price floor system for critical minerals. This is big news. In the global scramble for resources, nations are realizing that securing supply chains is a matter of national security. And here is the key detail for our audience. Silver is included in this system as a classified critical mineral. Now, we need to understand what this actually means. What is a price floor, and why does it change the game? Fundamentally, a price floor is not about the paper markets. It is not about day trading or speculation. Price floors are designed to ensure that domestic production remains viable. If the market price, the paper price, drops too low, it becomes impossible for miners to extract the metal at a profit. If they cannot make a profit, they shut down. If they shut down, the United States loses access to a strategic asset. To prevent this, the government sets a minimum price. They are essentially saying that you will not be able to sell or buy silver below a certain price. Think about the implications of this. We are used to a market where the price is discovered by traders buying and selling futures contracts. But a price floor mechanism introduces a new player, the government. If the market price falls below the floor set by the government becomes the buyer of last resort at that floor price. This is unprecedented in modern precious metals markets. We have seen similar mechanisms before, such as the Strategic Petroleum Reserve for oil, which allows the government to manage energy security. Now, critical minerals, including silver, are getting the same treatment. This leads us to a critical question that very few people are asking right now. What if the silver price floor is set above the current paper price? As we look at the data, we know that the paper price is currently trading around $86, but price floors are designed to keep production alive. If the government determines that the floor needs to be set at $90 or even $100 to ensure viability, what happens to the paper market? The paper market would be forced to adjust. If the floor is higher than the spot price must rise to meet the floor. This would not be a standard market rally. This would be a repricing event. You must know the difference. A rally is market sentiment. A repricing event is a structural adjustment forced by reality. The government is choosing strategic minerals over speculative assets. It is interesting to note that while the crypto industry asked for a strategic Bitcoin reserve, the government instead created a critical mineral reserve, which includes silver. This tells us exactly what they view as actually critical. They chose physical commodities essential to defense, technology, and energy infrastructure. While the government is preparing this long-term structural support, the current market action is telling a very specific and somewhat suspicious story. There is a clear...
So I'll get right back to it. So everybody bought Bitcoin because Trump was going to do this and that and make it a strategic thing. But he didn't. So what happened? Bitcoin went up to 120 a bit, and now it's back into the 60s. So now he's not doing what he said he's doing. And that is the history of Trump. This is why you don't believe a word he says. Maybe he's going to make this strategic. Maybe he won't. You don't know. Maybe that guy, the new Fed chair is the guy. Maybe he won't be. Is he going to get in? I don't know. Maybe not. All he did was nominate him. Doesn't mean he's the Fed chair. And even if he does get in, is he going to do what he said he can? No, he won't. You're not going to go on a gold-backed currency. The guy might like it or might not. It's not going to really matter because it's not even controlled by him. It's controlled by the banks and the mafia. They're the ones controlling the central bank. Like Jerome Powell, he's not controlling the central. He's in charge. He's the mouthpiece, but he's not really controlling. It's like if you watch that movie Casino. And they put that guy in charge to be president. He was just a mouthpiece. He wasn't running it. The mafia was running it. They just put a local lawyer as the president. So just notice how Trump lied. He said he was going to do Bitcoin. People got into it. And now he didn't. And now everybody's running out of it because it's never been real. And I called and told you that. Well, I didn't call it. I just knew it wasn't real because it's not backed by anything. It's not tangible. You need something physical. If it's not physical, don't own it. You've got to be able to have it, hold it, put it in a safe place. That's what you want. You don't want something, like I said, you're going to get a digital whiskey. So, I want to drink my Canadian Club. Well, it's digital. I can't drink it, but I own it. No. I need a bottle that I can open and drink. Anyway, so that's what she's saying. So you can't trust the government at all. I don't know why anybody would trust the government. You got to be out of your mind, but that's the key to it. So now they're coming up with this strategic floor. Why? Because they don't have any silver. So the technologies and the defense contractors need silver to produce, and they don't have any. And that's what reading between the lines is. They don't have any silver. That's why COMEX is gone. There's no silver in COMEX or gold. So when they need these silver and gold, they don't have any. And since we didn't produce any mines and the mines couldn't make any money, good old China has it, and China is not exporting it. So if you need some silver, you're not able to get it from China. Why would China sell us silver to build missiles and Tomahawk missiles to invade them with, or invade the Ukraine or invade Russia? So they said, no, you can't have the silver. So you can't build these missiles. The missile's useless without the silver, and there's no substitute for it. Can't use copper or zinc or nickel. So that's the problem. And that's what she's saying. So they'll put the price floor in is for the mines to be able to dig and guarantee profits, which is not free market, as I was just discussing. So the mines need to make enough profit to mine the gold and silver if they can find any. And that's why there's 50 countries involved in this. Some of them probably have gold and silver mines. And now we should just be working with them and paying them the difference to get the silver, but we're not. So that's a big part of it. So this whole alliance, does it mean anything? I don't know. Is it real? I doubt it. But anyway, just more food in the thought, oh, JD Vance did it. Oh, well, so what does that mean? Nothing. Anything coming out of the government we can't trust. Again, 9/11 was a gold robbery, and Israel stole all the gold. That's why we don't have the gold under Fort Knox or under that. If we had gold and silver in Fort Knox, why aren't we using that? Because there isn't any, or it's China's. All right, let's go back to this.
Pattern developing in the silver market today. We need to look at the price action around the $90 zone. Repeatedly, we have seen silver prices attempt to break through $90, and repeatedly, we have seen them get rejected. Recently, we saw a rejection from the $90 zone where the price fell back to $83. That represents a drop of 8 to 9% from the highs. But it is not just the drop that matters, it is when the drop happens. This event occurred during the New York trading session. This was the same pattern as the day before. Silver prices posted a massive reversal, falling nearly $9 per ounce in under 3 hours. At the same time, gold prices also fell $220 per ounce in under 3 hours. What pattern do you see here? Let's look at the timeline. During Asian and European trading hours, silver rallies. Investors in these regions are buying. The price goes up. Then, as soon as the New York session opens, massive selling hits the market and the price reverses. It happened yesterday, up to 90, then back down. It happened today, up to 90, then back to 83. The $90 zone is acting as strong resistance, and the New York session is consistently where the selling pressure appears. This suggests a bifurcation in the market. We are up all night on global physical demand, and we are down all day via derivative selling in New York. That is the pattern. Physical buyers are accumulating overnight. Paper sellers are dumping during United States trading hours. This raises a massive question about market integrity and true value. If the rest of the world is buying, and the price is only collapsing during a specific window in the US futures market, are we looking at true price discovery? Currently, as we analyze this script, Western spot silver is at $86. Western futures are at $86. But look at Shanghai. Shanghai spot silver is at $102. Shanghai futures are at $101. That is a massive discrepancy. The Shanghai premium is $16, or roughly a 19% premium over the Western price. This confirms the pattern. The physical market in Asia is valuing silver significantly higher than the paper market in New York. While New York traders are selling paper contracts and driving the price down to $83 or $86, buyers in Shanghai are paying over $100. So, we have a tug of war. On one side, we have the New York paper market rejecting price at $90. On the other side, we have the Shanghai physical market paying a 19% premium. And looming over all of this is the new US policy of a price floor, which suggests the government knows the price needs to be supported. Now, let's move from price action to the physical delivery data. This is where the story gets even more compelling. We are seeing numbers coming out of the COMEX that are simply not normal. Let's talk about February. In the commodities market, February is typically considered a non-primary delivery month. Usually, primary delivery months like March, May, and July see high activity, while months like February see minimal deliveries. But that is not what is happening this February. In the first 4 days of February alone, 14.8 million ounces of silver delivery notices hit the COMEX vaults. Let me repeat that number so it sinks in. 14.8 million ounces. To put this in perspective, let's look at the open interest. Open interest refers to the number of active contracts held by traders. At the close of business on January 30th, the open interest in the February silver contract was just 1,231 contracts. However, by the following Tuesday, only 2 days later, 2,955 delivery notices had been issued for the February contract. This means that nearly 3 times the entire open interest in the February contract at the end of January has issued delivery notices within the first 2 trading days of February. How is this possible? It means that new longs, new buyers, are entering the market and standing for immediate delivery of physical silver. They are not buying futures to trade the price. They are buying futures to take the metal. Open interest remains low because these buyers are taking the metal and leaving. This is a classic stand for delivery scenario. We are seeing delivery notices of 2,955 contracts against an open interest that was much lower. That is 2.4 times the open interest demanding physical delivery. This confirms that physical demand is relentless despite the volatility we are seeing in the paper price. While the New York trading session is dumping paper contracts to drive the price down to $83, someone else is stepping in and taking 14 million ounces of physical silver out of the market. This is the second month in a row that a non-primary delivery month has seen historically massive silver delivery notices. Why would buyers demand immediate delivery in a non-primary month? Because they want the metal now. They are not willing to wait for the standard delivery cycle. They are seeing the same risks we are discussing, and they are securing physical assets immediately. We have discussed the government policy. We have discussed the price manipulation pattern. We have discussed the massive physical deliveries. Now we must look at the structural health of the market itself. There is a metric.
So why are people asking for physical? Because the price is cheaper. Why are they even on COMEX? Because they can get the price cheaper than in China. Secondly, they ask for delivery immediately. Why? Because they're worried it won't be there because there is no physical there. So they ask immediately, deliver my contracts. Right now I'm not playing the futures game. I'm playing the physical game, but your price is so much cheaper. But because people are still getting out of their options and still getting out of the margin calls and everything else, the price keeps going down, which attracts buyers only for the physical. And that's why I'm saying COMEX is gone. There just isn't any physical. People don't want to wait. They know if they don't get it now, there's not going to be physical, and they don't want our money. So they know the inflation, they know the money is worthless, and they know they want physical cheaper. So they come to the US to buy it. So it's all a little game of Ponzi scheme being played here where they're dumping it so people can come in and buy the physical. And that's what I'm saying is going on for 5 years. We keep the price low. People buy the physical. China, that's where China got 80,000 tons. They were buying the shit out of it. So were we. I bought the shit out of it at these cheap prices, knowing the price was much higher because I know what inflation is, which apparently only a few people have an idea that it's the value of the money is worthless. Nobody else understands it. So I want to Rumpelstiltskin and trade the money for gold and silver for real money, real assets. And that's the thing. And I'm out of the stock market, and COMEX is collapsing. And that the bullshit media, the Joseph Goebbels here saying, "Oh, the price went down because we'll have real money now," and we've assigned a good guy to run the Federal Reserve in May. What a bunch of crap! There's nothing he could do. If I was the Fed chairman, I couldn't do anything except come out with gold-backed currency if I could. But I didn't get killed like JFK. So if I had that opportunity to do it, if I was really in charge, I'd come out with gold-backed currency. But I doubt that he's in charge. It's more of a George Soros, and he wants to collapse the dollar and make money off of it. So I don't think I could do that. I don't think I'd have the opportunity to fix it, is what I'm saying. So I don't think this guy's just a figurehead. I don't think this guy can really go in and all of a sudden the dollar, oh, look, the dollar's stronger. The dollar cannot be stronger because it's been printed to death. The only way the dollar's stronger is if you back it by gold. Anything else is bullshit, and don't listen to it. All right. So this is pretty interesting. I believe most of it. So we'll see. All right.
That experts use to gauge the stress in the silver market, the 1-year silver swap minus US interest rates. Right now, this metric is showing silver market imbalances that are larger than during the 2008 financial crisis. They are also larger than during the 2011 silver mania. This is a critical piece of data. A sell-off driven by over-leveraged paper positions is not the same as real oversupply. The price drop we see on the charts might look like weakness, but the structural imbalance tells us that the market is at historic extremes. When the structural imbalance is this high, larger than 2008, larger than 2011, it implies that the rubber band is stretched to its breaking point. The tension is building, and now, into this high tension environment, the US government is stepping in with a price floor system. You have to ask yourself, does the government know something the average trader does not? Why implement a price floor system now? Perhaps because they see these imbalances. They know that domestic production must be protected because the market is becoming unstable. We also have to look at the other whales in the market: central banks. Central banks are the quiet, underappreciated, and unseen whales in this market. For the past several years, central banks led by China, Russia, India, and Turkey have been buying gold at a historic pace. They just topped 5,000 tons for the first time in history. This relentless central bank buying acts as a massive, price-insensitive bid in the market. They are not trying to scalp a few points like a day trader. They are accumulating strategic reserves for the long term, and they are doing so in ever larger numbers. Americans, for the most part, seem to be totally unaware of this intense gold and silver buying that is happening around the rest of the world. There is a misconception that because Americans are not buying, the rest of the world is not buying. The source explicitly warns that Americans will pay dearly for that ignorance. China's demand for gold and silver is stable. Physical demand globally is not collapsing. It is only the paper price in New York that suggests weakness. We cannot view silver in a vacuum. We must understand the broader economic context that is driving these moves. Today, we are seeing significant risk-off sentiment spreading across all asset classes. US stocks are dumping. The S&P 500 is down significantly, erasing about $580 billion in market value in a single day. The Nasdaq is down, wiping out roughly $1 trillion in value. The Russell 2000 is down. Risk is being sold across the entire US market. At the same time, geopolitical tensions are escalating. Nuclear talks between the US and Iran, which were scheduled for Friday, have reportedly been cancelled. On this news, oil prices are surging to $65 per barrel. We are also seeing massive swings in sentiment in Chinese markets. China's 4 largest gold-backed ETFs posted negative outflows of $980 million on Tuesday. This was the biggest daily withdrawal on record. This follows negative outflows on Monday as well. This volatility is shaking out weak hands. It creates an environment of fear. In such an environment, paper assets are sold, Bitcoin positions are down, Ethereum is falling. But this is where the opportunity lies for those who understand the structural difference between paper and metal. The pattern we identified, rejected at $90, risk-off sentiment spreading, geopolitical tension, suggests that we could test lower levels again before finally breaking through. However, the bearish case is overwhelmed by structural developments. Why? Because of everything we have just discussed. The US is establishing a price floor system for critical minerals. 14.8 million ounces of silver were delivered in 4 days. Silver market imbalances are larger than in 2008 and 2011. Central banks are accumulating at a record pace. The $90 rejection pattern during New York sessions appears to be paper manipulation, while the price floor system announcement is government policy responding to strategic necessity. Ray Dalio has called for gold to be the world's new currency to replace the fiat system. It is the beginning of the end of the monetary system as we know it. For this to happen, gold, and by extension silver, would need to trade significantly higher than current levels. The entire system is being repriced. Nothing looks organic anymore. Every asset class shows signs of manipulation. The goal isn't to fix the system anymore. It is to extract value before restructuring. So, where does this leave us? We have covered a vast amount of information, so let's cut to the chase and synthesize the 3 must-know takeaways from this analysis. Takeaway number 1. The United States government has changed the game. Vice President Vance's announcement of a price floor system for critical minerals, including silver, fundamentally changes the market structure. This is not market speculation. This is government policy. Price floors are designed to keep domestic production viable. If the floor is set at or above current paper prices, the paper price will be forced to adjust upward. The Strategic Petroleum Reserve Model is now being applied to critical minerals. The implications for silver are enormous. Takeaway number 2, the physical market is screaming shortage. We have seen 14.8 million ounces of silver delivery notices in the first 4 days of February. We have seen 2,955 contracts issued for delivery against an open interest of only 1,131. This is happening in a non-primary month. New longs are entering and taking metal immediately. This is the second consecutive month of historically massive deliveries in non-primary months. Physical demand is relentless, regardless of what the paper price says. Takeaway number 3, the battle at $90. We have a clear pattern. Silver is rejected at $90 during the New York session, dropping 8 to 9%. We are up all night on global physical demand and down all day via derivative selling in New York. We have resistance at the 150-hour EMA, but here is the unresolved tension that you must watch. On one hand, we have the price floor system being established by the US government. We have historic physical deliveries. We have market imbalances at record extremes. On the other hand, we have the consistent New York selling pattern that refuses to let the price break $90. Does the $90 rejection pattern continue until the price floor mechanism is actually implemented? Or do we break through sooner, based on physical demand, finally overwhelming paper supply? The government is responding to strategic reality. The paper market is responding to leverage and positioning. Which force wins? The short term will determine if we test lower prices or finally break 90 and head toward the resistance at $96 or $97. You must do your own due diligence. You must understand the risks. The $90 rejection pattern is real. The risk-off sentiment is spreading, but the US government is establishing a floor. The paper pattern and the structural policy developments are currently moving in opposite directions. You need to know which time frame you are trading. Are you trading the daily fluctuation of the paper market? Or are you investing based on the structural reality of government policy and physical scarcity? Invest with logic, not hype. Use your own brain.
Bottom line, stay in physical. Why? Because physical is limited. They can't inflate it. The demand is huge. The supply is nothing. And they're telling you the supply is nothing because we have to make this whole ground floor bullshit because we got to make sure the miners are profitable so they'll mine silver and gold because we don't have any. Because we've had our heads up in there, not us, the government had their head up their asses. And they haven't. Why haven't they been accumulating silver? They know they need it for the critical. Did they not see bricks? They didn't take bricks for real. We did. We mentioned bricks a long time. That's why we bought physical, because we knew they were increasing the demand for it. All right. So anyway, I thought that was a very good video. It explained a lot. And it's basically what we know. Buy physical, get the hell out of paper. But now we're seeing Bitcoin getting crushed. People need money and they're getting out of it. And there's no money. You got to put it in the bank. The real killer is going to be when they find out this is worthless, right? And they find out the stock market's crashing, which she mentioned that the stock market was also going down. So once you understand all that, the only place to be is the physical market. All right, so I hope you enjoy. Any questions on that? No, I don't trust AI. I don't know who the lady is. I just stumbled on her. Cardiac take. Oh, you're giving football advice, John C. Now you're a football handicapper. Who is this? I don't know. I just was stumbling through looking to see what's going on with gold and silver. And I wanted to verify this 50 country thing, which she kind of verified this floor. Basically, we've run out of money of metal. We need the mines to open up, but it's going to take the mines 3 years to open up. won't sell us any silver, nor neither will Russia. Maybe Saudi Arabia will. And these prices are way too cheap. And again, at $90 for the U.S. and all that bullshit. No, I don't trust AI. I've made that clear. All right, so let's look at football. Again, the line I didn't see change. All right, so gold's back to 48.76. See, again, it was the 10 o'clock drop. I mean, we got this down cold, the 10 o'clock drop. And silver back to 76.45. All right. So we've got, again, Seattle 4.5, 45.5. And that's been consistent the whole way through. In my book, I've got New England as an A team with a 13 defense, Drake May, and they're 19-1 in a teaser. I've got Seattle as an A team with a 16 defense, and Darnell, and they're 16-3 in a teaser. So both teams are good in a teaser. Both teams have good defense. That's why the free pick is go under in the game. It's 46, 45.5. I got it in 46 last week. So you go under 52. That means as long as the game doesn't get over the 20s, so 28-24, it's a push, which I can't see it getting that high. Then you're fine. And then you got to do the second half of the teaser. My score I got is I'm going to change it to 27-10. I'm going to go 20. So I had it at 30-10. Let's go 27-10. Seattle. I just don't think Drake May's capable. He runs a lot. I don't trust Darnold like I don't trust AI. Darnold is okay. He did beat the Niners twice and the Rams in the last couple of weeks. So the Niners were scoring a lot. That's why I like the under. The Niner-Bear game was like an 80-point game. So Purdy looked pretty good in that game. And then he gets into Seattle and he doesn't do anything. And then you've got Darnell has been putting up points against the Niners, which is very good. The Niners had a 22 defense, and he put up 41. And then against the Rams, they had a 26 defense, and he puts up 31. Here you're playing New England with the 13 defense. He'll probably be in the 20s. So again, that 27-10, 24-10 number, somewhere there. I don't think New England does much. They didn't do much against Denver. They didn't do much against San Diego. And the only reason they scored on Houston was strictly the turnovers by C.J. Stroud, who's not a real quarterback either. I showed you that Tom Brady thing on the quarterbacks where none of them know what they're doing. They're not good they don't read the plays. They don't read the defense. So Brady would say, I'd see the safety coming up on the right, and if I had a run play called, we can't block them. So I would have to change to the play going to the left or a pass. And that's what these quarterbacks don't know how to do now. Most of them. Stafford does. Purdy might. Darnell doesn't. Drake May certainly does. Any of these new quarterbacks have no idea what they're doing. They just call the play and they'll run the ball into it. Like I said with Lamar and Derrick Henry against Buffalo, here the Buffalo stacks up one side. Lamar still calls the play, and Henry gets hit 3 yards behind the line and fumbles. That was on Lamar for not changing the play. So I don't know. The new coach isn't going to do anything. Lamar's not a quarterback, so it's just ridiculous. But that's what happens, right? He doesn't get out of the play. Henry fumbles when the play should have been changed to something on the other side, or he fakes it and runs the other side or something. But you can't stick with the play you got to look at the defense, go, where's the strength, and go away from it. It's always the art of war, strength and weakness. He doesn't do a very good job of that, as none of these quarterbacks do, except for your Aaron Rodgers, your Stafford, your Mahomes, your Joe Burrow, who understand it. That's why they're elite. Everybody else sucks. Anyway, so Super Bowl, it's 6 o'clock, 6:30, I believe. What time is it? 6:30. It's It's 6:30 on the 8th on Sunday, on NBC, I think. Well, it doesn't matter. It's one of those major networks, but it's on NBC. 6:30 on NBC. Probably kicks off 6:40. They'll probably do the national anthem and have to introduce the referees and who their sports book is and how much they're getting paid to throw the games and stuff like that. Um, I would have a movie on, so when you get to all these commercials, you just switch to the movie and then switch back. It's getting so hard to watch. Do I think the Super Bowl will be rigged? No, I don't think the Super Bowl. The only one that was rigged that we can say there's two was the Jets over Baltimore because the Baltimore owner bet on the Jets, and the Jerry Rice when he was on Tampa against what was that, Tampa versus Oakland one. So Jerry Rice was on Oakland, and the coach all week practiced to do X, and then he changed it the day of the game to do Y, and they ran the same plays that they did that when John Gruden was there. So John Gruden knew all the plays they were calling. Those are the two that I know were fixed. Do you get some fixed plays? You do have some bad calls, but I think it's just because you got bad referees and you got guys falling down. I just think because the guys stink. I know there's that one guy on the channel and he does the 10 rigged plays of the week. And I watched a little of that and and I'm like, the plays aren't rigged. The guys just aren't very good. Having my barbecue leftovers from yesterday. The players just aren't good. What you got is a lot of fast guys in the secondary, but they can't tackle. They don't want to tackle. Prime Senior was like that. He didn't want to tackle. So they're there to cover. And if the runner's yeah, you'll see a guy run the wrong way. I don't know if if that's fixed or these guys are just idiots or they just don't want to tackle. But it's hard to really say because of the way as bad as they are. Right. It's the Super Bowl. I would think I've been watching the World Series of Poker came on, the old ones. Aussie, oi, oi, vey, and the Greg with the glasses. So these are starting to come back on ESPN or on YouTube. And it's like saying, are they fake? And the guy says, well, this is great. You're the world champion. They can never take it away from you. So you have a chance to be the world champion in football. I can't imagine you're fixing the game. I can imagine Seattle by 4.5. You can win, but you can't win by 4.5. But they're not going to lose the game. Now, I don't think that's the case. It's such a low spread that it's a field goal game. Now, that could happen where they win by a field goal. I think they'll be up 10, and then the other team will go down 3. But remember when Seattle beat Denver and Peyton Manning, they won like 52 to 6 or something like that. So they killed them. So I think people are caught on everything being fixed, and I don't think it is. I certainly don't think this game's fixed. Maybe the New England Denver was because they wanted Drake May in the Super Bowl versus Stidham. If it was Bo Nix, it wouldn't have been. But with Stidham, maybe that was fixed. But that's really strange because that would mean the coach who didn't go for the field goal at the 10-yard line was the one fixing it because he went for it on 4th down, didn't get it. Then now when Drake May threw the incompletion, they called it a lateral. That was fixed. That was not a lateral. He threw it, he pushed it forward, and the guy batted it back, and the ball goes back. Well, it was batted back, but they conveniently don't say that. So that's part of the fix too. But the way I see it, I don't think, I think the total could get fixed. So let's see what's total here, 46. And people are on the under as it's 45.5, and we'll see more on Sunday. That could be fixed where it's a touchdown called back because it's to keep the score down. Because really it's not a lot bet on it. It's 46, 45.5. That would be no reason to fix that. But let's say a lot of under money comes in, then they might have another score. I don't know. But sort of like New England, Houston was high scoring, and then New England, Denver was no scoring. So that could be it. But pretty much, if the field goal goes through, you pretty much have to call it the way you see it. You can call like holding and pass interference penalties. So if you need the over, you call a pass interference penalty, so the other team can score, or so either team can score on a bullshit pass interference. But it's hard. It's not like it used to be when I'm watching these older games. You're watching the Sea of Hands, the 74 Miami Oakland. There's no way that game was fixed. That game was dead on the line, as it should be. It moved quickly. If you're watching the highlights, you're watching the game, it's boom, boom, boom. There's no line to gain. It's the ref says it's Cliff Branch catches the ball, goes for a touchdown, 70 yards. That was it. The ref said touchdown. It was a touchdown. They didn't well, let's review it and did he do it? Franco Harris and Macklin. Well, wait, let's review it and see if the ball hit the ground. Let's see if the ball hit Jack Tatum or not. Clearly hit Jack Tatum, even if it hit Frenchy Fuqua first, because the ball ricocheted backwards. And Frenchy Fuqua was not going straight. Frenchy Fuqua was over here, and he went up, and then he cut into the middle. So if anything, the ball is going to go sideways if Frenchy Fuqua hit it, not straight back, because Frenchy Fuqua was not coming straight back. He was coming sideways into the ball. Jack Tatum, I don't know what he was thinking. All he had to do was just knock the ball down and you win the game. The only way you could lose is to try to hit the guy really hard and hit the ball and have the ball ricochet back 10 yards to Franco Harris. This is the only way you can lose the fucking game. Just get out of the way. Let the guy catch it. There's no time on the clock. I mean, anything, but that was just stupidity by Jack Tatum. And I like Jack Tatum. I liked him at Ohio State, but what were you doing? What were you thinking? And I'll bring that to poker. So I'm watching these poker tournaments, and poker's just all luck, right? The guy's got aces against kings, and the guy gets the flops a king. Now, well, wait, the aces should have won. So it's all luck, poker, and all these. Maybe the only skill is reading the player to call him or call a bluff. That might be the only skill, of which in a tournament I wouldn't fuck around with it unless I had a hand, because there's no reason. You'll see these guys call with ace nine, and then they don't hit the board, and then they lose to the pair of fives. Why are you taking that risk? You shouldn't be taking that risk. You should be folding and waiting for your hand when you have the pocket nines or the pocket kings or whatever. Just wait. But I guess these guys get tired. They go on tilt a lot. Well, it's a long day. That's probably a part of it. Probably having a lot of sugar, which they shouldn't be, which is another part of it, because that tires you out. Anyway, so what else? So let's review. We talked about why money. Money is a trading instrument used to trade money for goods and services. You trade money for football. You trade money to play poker. You trade money to buy clothes and food. So it's a trade. And the government shouldn't be ruining the money, but that's what they're doing. So basically, the government's printing the money, making it worthless. So you need more dollars to buy things. So the value of the dollar is gone. When Oreos are $5 for the little tray of 3 sleeves of Oreos, that's a problem. It's a $1.50 item. And so they've made the money worthless, which most people don't know because nobody's tracking the value of the money. How do you track that? I don't know. I'll see if there's a way to track it. I assume it's prices. That's why they're looking at prices as the only way to really track it. But we just know if you print all this money, it's worthless. And that's exactly what's happening. And then we see what's going on in the market. Everybody's got to do margin calls and they're shorting, and it's paper, and we're looking at physical. So as long as you just trade your dollars for physical, Rumpelstiltskin, you're fine. You do not get involved in investments of Bitcoin, of investments in the stock market, of investments in options. then you will lose your money. As long as you buy an asset that is a good asset, so you're trading very high printed dollars for very gold and silver that can't be printed. So even if you don't know anything and nothing else is happening, you do it for that reason. I mean, like I said, I was buying silver at $25 an ounce, probably $20 an ounce, because I knew it was worth more, because I knew they couldn't inflate it, and I knew the dollar was being inflated. So even though the price wasn't moving years ago at $20, I knew it would move, and I still know it will move. So this is not a guess. This is not, well, maybe it'll happen. This is for sure happening, and I'm giving you the reason, the inflation. Profit. I can get Seattle +1 under 51 for the 100, or New England +11 under 51 at 100. Not sure on the side yet, but I do like the number. Well, I gave you my opinion, so do as you wish. That's the other thing. People like to make their own decisions. So you got to understand when I should listen to somebody and when I should ignore them and make my own decision. The problem with what Prophet does, if he uses the AI, is he's not making his own decision. He's listening to AI, and AI says, well, this should be the score. And so he says, oh, I'm going to bet it because that's what AI says. And I don't use AI. I use the professor. I come up with my score, my own score, and that's how I bet, and that's how I win, because I look at what is the outcome that I see, and I don't get disoriented by anybody else. Right? Same thing. Buy real estate trust, attack on Wall Street guy, or buy this or buy that. And the guy lost 60,000 by listening to his broker buying real estate trust. He didn't make up his own decision. He listened to the broker that he eventually shot. But then it's dirty pool when the guys who are running the investment firms delete the transaction, say, yeah, we're going to list this whole thing. So anybody owning it, it's now worthless. Well, that's not right. That's worse. But that's why we don't deal with Wall Street and the banks. We deal with gold and silver that we own ourselves. So now I listen to myself based on a teacher who taught me. Now I understand it and I can make my own decisions. And I bought this, and I'm not worried about Wall Street doing anything to me. It's mine. I have it in my hand. That's why I'm telling you about Bitcoin. You don't have control over it. You don't have control over the stocks. The economy's in a deep recession, which maybe me and a few other people can tell you. The economy's terrible here. So you got to understand that. But I don't know really where to go, because Europe, it's crashing. China, it's crashing, but they have gold. Russia, again, all these countries have dollars that aren't backed by anything. So if they're not backed by anything, they're all worthless. So that's the key to the game. But it's something you have to know, and you can't listen to anybody. I can teach you, and then you go, yeah, okay, Howard. But you got to trust that who you're listening to. But you want to make your own decisions. So Prophet needs to make his decision. Now he can use my input to get his decision, but if he's looking at AI to get the decision or some formula, I would never use a formula to predict a game. I can use my analysis of how they are in a teaser. Like I can tell you, New England's 19-1 in a teaser. I can tell you that, but that's just a partial way of actually picking the game. That just tells me, well, they'd be good as a dog, which I think they would. Well, I don't know. I don't know how good Drake may. Seattle scares me, basically. They're the better team. But that's what you're looking at, how you arrive at that. But you've got to make the pick, and you've got to have that gut instinct, and you have to put the score down that you think, and you have to practice putting the score down. But you're the one who has to do that, right? You can't like throw the numbers in a formula. You're being lazy, because there's no way your formula is accurate. And then you say, well, this is what happened. I'm going to play that. And as Nick told you, you can't do it, right? He said, listen to Howard, because he knows you cannot use formulas because they won't work. And that's really the key to it. So you have to be careful. You got to rely on yourself and yourself to make the score and yourself to analyze, to predict the game. It's like poker. I'm at the poker table. It's me against whoever, right? Doyle Brunson, me and Doyle. And I got to watch the way he bets. And, does he check when he's got the hand? Does he eat Oreo cookies? You got to look at all that stuff and make your decision. But there's nobody helping you there. Nobody can come over and say, oh, yeah, this and that. I have had people at the table tell me, well, yeah, that guy bluffs a lot and things like that. But you just got to be very careful. Anyway, so that's a lot of it. Prophet, I do program in the factors I want AI to analyze for me and compare it to the base model. You can't use models. Your whole thesis is wrong because you're putting in the variables, but you don't know how to score the variables. You can't use variables. I look at the defense, the quarterback, the coach. Then I look at them in a teaser and I go, New England's 19-1 in the teaser. Well, like here, I had Green Bay, Chicago, and Green Bay was 15-1 as a road dog, which I won. I locked it because the Bears were a 1-point favorite at first. So I locked Green Bay in 7 immediately as Green Bay's 15-1 in a road dog. But that's kind of, are they good as a road dog? Can they play that way? And then I looked at it and I said, well, the Bears defense stinks. And Green Bay moves the ball all over on them. And Green Bay had a big lead, should have won the game. But they did cover. And so I'm using the teaser only to tell me, are they good in this role? After that, I'm not really looking at it. I'm basically just I'm analyzing the game. 2 good defenses. I use the defensive points, but I'm not using a formula. I'm not really using a model. I'm just saying, how are these defenses? And I go back last 5. I look at the quarterback. I don't really trust either one. I look at the coach. I don't really trust either one because they've never been there before. And so it's basically the Seattle defense is the cause of the bet. And that's what I'm doing. And I don't trust Drake May, and they look terrible against Denver, and they look terrible against San Diego. So New England's offense is not going to generate a lot of points. So that's where the under comes from. And Seattle's got a very strong defense. Anybody that can hold Frisco beats Philly 23-19. They scored 23 on a good Philly 15 defense. And then Seattle beats them 41-6. They only got 6. The Rams got 27, which I knew they would because of it's a different offense with Stafford, so they're going to score more. Puka Nuka, you're not stopping those two. But against Drake May, he doesn't have receivers. He doesn't have running backs. He runs a lot. He's not putting up anything. It's going to be like San Francisco with Purdy and McCaffrey. You're going to get 6 points, maybe 10. That's it. You're not going to score a lot on them, so you're not going to win the game. And Seattle has enough with their Kenneth Walker and Smith Najimba and the Darnell, who I can't trust. You can't just ignore what happened last year and say, well, he had a good game against the Rams, so that's it. So he's okay. Well, they didn't blitz him the way they did last year, or they ran the ball a lot more with Kenneth Walker, so you couldn't just blitz that. And I think that's the key difference. Darnold still is a choke, but he'll hand the ball to Kenneth Walker here, and he'll be able to keep the pressure off of him, and they'll throw the ball. So that's why I'm sitting there. So I'm like 27-10, 30-10. And that's how you have to that's what I think will happen. But it's my pick, my analysis, my thesis, not somebody else. But I can't put in variables. I'm putting in the variables mentally, but not in a formula. So I am noting Kenneth Walker. I am noticing Drake May and the coach and the defense. So those are but I can't formula them. That doesn't work. So that's where you're at. So again, 27, roughly 27-10, Seattle. Again, 6:30. I can't believe the year's over. We just started. We're researching all the teams and trying to find all that. And the weeks go by, and then here comes the playoffs, and then here comes the Super Bowl, and then it'll be tears for until the next summer. We're all excited when August hits and we get preseason. They're not going to go with 18 games, as they said they don't like. It's too many games. 17's too many. Sometimes there's not. It's like Gordon Ramsay goes into these restaurants and they have 50 things on the menu. And, this is kitchen nightmare. And then he goes and he changes it and he says, we're just going to have 8 things on the menu. We'll make it good, but we'll have 8 things. There's less inventory for you to buy. And the people, they'll have 8 things to choose, which is sort of like you go to a pizza place, you're getting pizza. That's it. You might have different toppings for it, but, or you go to, McDonald's, it's a hamburger. Or, some of these restaurants, you're getting a hamburger or you're getting a hot dog, or, Wendy's, you're getting a hamburger, stuff like that. So you don't have too much things on the menu. And that's basically what you're trying to accomplish. I don't know where I was going with that. Too many choices. You can, too many games. So 18 games is too many. 17 is too many. You probably have 16 games. Gives the teams chance because the players, are you worried about the players' health or not? You say you're worried about the players' health. And we have these stupid kickoffs and we have all these. We got to make sure the game's fair. So we got to have every 5 minutes a review. And did he get the foot in? And every scoring play, even if the guy clearly scored, we're going to review it. I mean, it's just ridiculous. Is it a catch or not? The guy caught the ball. If I catch the ball, I catch the ball. Now, if I fumble when I land, I fumble when I land. But I caught the ball. The whole thing's so stupid now. It's very difficult. As I was comparing movies yesterday, and so the movies, I think what I figured out in the movie things, are they smart? I liked Money Heist because it was smart, right? The professor was smart. He switched the gold for brass, and then he used that as leverage, saying, if you kill us, we're going to tell everybody that you have brass, and then you'll go bankrupt. So the only way you don't go bankrupt is to let us go, and everybody thinks you got gold because nobody's going to look at it as brass. But that was smart, and that's what I was saying, like Titanic, I didn't think was a smart movie, or a lot of these movies aren't smart. But that's where I do like, what were some of them? Like The Sting, I thought was okay. But some of the Cool Hand Luke, I thought wasn't a smart movie. He wasn't smart by trying to escape, like he was going to get away. So that's what I don't like. If the movie's stupid, when I watch it and it doesn't make sense, and that's what I was getting with Titanic, it didn't make sense that the guy, Leonardo, was all of a sudden mingling with the rich guys and the girl fell in love with him. It made no sense. And Alyssa said, well, it was a love movie, a love story. And I go, no, it wasn't a love story. It was an idiot story, but it wasn't a love. There was love in it, but it was stupid. So that's the thing about that is it was stupid. It didn't make sense that she would fall for the guy and leave the guy who's a millionaire. Well, she did it for love. No, not in the 1910s. You didn't do it for love. You did it for money. And a lot of girls do it now. They marry for money. So, yeah, I didn't buy that. I didn't see anything that made her fall in love with the guy, right? It just wasn't a smart movie. And you see it. That's why I like the Money Heist types where it's very clever how they get in and out and deceive and stuff like that. I see a lot of like CIA movies and FBI movies, and now everything's James Bond or Mission Impossible. It's all the same movie. I don't know what I'm watching sometimes. Is this James Bond? Is this Mission Impossible? Why is it the same movie? It's not supposed to be the same script. So you're getting a lot of those. I see movies coming out and they're all CIA and the guy turns crooked or crime and they're trying to steal things. I don't know what's going on, but it's crazy. Anyway, so don't worry too much about gold and silver. We see this floor coming in. Maybe I don't. Who knows? If we do, the silver has to be higher because it's based on we don't have any silver. We need it to make for the defense contractors to make their missiles and blow up people. They need silver. The miners aren't going to build because the silver's too cheap. So they're going to have to put a floor in. Now it can still go over the floor, but it'll be, well, the worst it's going to be is $100 or $200 silver, but it can go to 1,000 as it should. And I think that's about it. Have a good day. Any questions or comments? We'll take our last. Well, I'm not even concerned about gold or silver now. Let's see who just dinged me. Yeah, I know my bank payments too. I don't think I took a picture for the girls. No, why do I wear this blue sweatshirt? Because it's extremely lucky for me. And I had my green sweatshirt on, and then the gold and silver started falling, and I switched to the blue. And then it came back the other days, so I keep it on. This is my football sweatshirt. I got really hot in it, so I'm on a big 15-2 run. So I'm wearing this for Sunday anyway. But a lot it's cold here, so I just keep it on, and we will see. Anyway, I think that's it. So let's take our last look at gold and silver, see what the hell is going on. Anyway, so let's see, gold. Gold and silver. We got 76.82 and 48.29. I come on around 10, so we always got that 10 o'clock drop. Gold did push back up to 48.70, but it's in the 48s is fine. And then silver 76.39. We know it's all the Ponzi scheme. It's the margin calls. It's all the paper bullshit. So there's really not much to look at there. We just know that we know it's worth a lot more, and we don't have to watch COMEX every minute and see the price running around. It's maintaining the 76 is fine until we get to physical, which should be soon. Again, this is rare that every day the U.S. keeps dropping it, but they keep raising the margin calls. And so they got to sell their positions, which keeps the price going down. But that's it. It'll just keep popping up as people want to buy physical until there's no physical sell, which is what you're getting. And people are coming in and immediately asking for delivery. And so they're in and out real quickly. Prophet, do you have any silver? What do you think I keep showing you? Yeah, there it is. I told you I have silver. I got silver, I got gold, I got mantle cards, I got everything. I got that. You got those gold bars, Prophet. Why would you ask me that question? I got. Anyway, so that's about it. So just understand it's extremely limited gold and silver, physical, coins and bars. It's extremely limited, even the jewelry, very limited supply, very high demand. That's all that should be going through your mind. And that's it. You want to go buy something, buy uranium, because that's very limited and very high demand also. But that's the thing with gold and silver. It's extremely limited, China and BRICS are buying the shit out of it. And as these countries join BRICS, they're going to need gold to go on a gold-backed currency and silver. And they trade amongst each other, and they're not using the dollar. So basically, the U.S. has collapsed. The dollar's worthless. That's all you need to know. And your only out is to get into gold and silver, because you won't be able to trade in this dollar anymore, because this dollar will have no value. And when the Oreos go to $10 a box, you'll realize it isn't Oreos raising their price because they're greedy. It's this dollar. I need to trade more dollars for the Oreos. So keep an eye on that. I've noticed $3, $4, over 5, 6, and it just keeps going. And eventually it's because that dollar has been printed to death. And your government keeps printing it and keeps having to pay. The government went back to work. My friend called me. He says, "Oh, I'm back to work." I go, "That was short." But they still didn't cut government, and they're still using the fake dollars to pay for it. So they're paying employees with fake dollars. I mean, the dollars are worthless. Now, you can still go to the store and pay your rent and mortgage with the fake dollars, so that's fine. But keep in mind, that's not going to last long, and you got to be prepared for it. Well, the great time to buy profit was in 2020 when it was $20 an ounce. That's when I've been buying. I've been buying since then. Even these were $30 an ounce when I bought this 2-ouncer. But yeah, and it's really blown up a lot. In December, January, it moved from 40 to 120. So it's moved quite a bit in a fast amount of time. But that's all BRICS doing. That's China, Russia. Yeah. So anyway, have a good day. www.teacherking.com. And off you go. So have a good day, everybody. Be smart. Don't be too concerned with silver, the COMEX dump. It's going, they don't have physical, so people are going in and selling immediately, and people are margin call and they have to get out and get out of their short positions. That's what's happening. It's the margin call because the price keeps dropping. So this $90, it's already been to 120. So I don't know what she was talking about. This resistance at 90 or 96. It's gone to 120. So we'll see. And once it's gone there, we'll get it back. Same with gold. It hit 5,600. So we know it'll go back there. It happens every once in a while. They dick around a little bit. It goes up and then it goes back down. And then eventually it sits around there. And then eventually it zooms up like we just had. So keep in mind, keep it, don't sell it. Unless you need to sell an ounce for a bill or a trip, you don't really want to sell it. All right. Well, have a good day, everybody. www.teaserking.com. I've had some queries about the Super Bowl. $50, and you get the teaser. It's a lock teaser, by the way. You will get that. So anyway, have a good day and enjoy. All right. Take care, everybody. Thank you. Hope you enjoy.